Alrighty. It is TGIF. That's right. Thank goodness it's Friday. Doc here from North America. Good morning, good afternoon, and good evening. It is the classic. I can tell you that. It is another day of the battles of internet, uh, internet conversation of purchases like Reddit and so forth, versus the uh, the the hedge funds, which is really funny to watch. I mean, really, they've squeezed them. I love it. And again, we talk about binary options and trading more responsibly around here, and obviously that is not a conversation whatsoever anywhere else on the financial networks. That's for sure. They steer clear of that. That's for sure. They have no interest in using common sense. Instead, it's all visceral. That's the only way to look at it. So anyway, that's what's going on. It's fascinating to watch. It's enjoyable, and it's fun when people ask me, "Geez, what's that all about? You do something with that market, don't you?" I go, "Yeah, sure." Anyway, let's see what's going on here. Let's jump over to the Swiss this morning and see what the Swiss looks like. The dollar has been firm. And let's see. And the pairs have been weak. And where are we there? Let's go to the Forex there. There it is right there. Right there. There's the Swissy. You can see it's moving down a little bit, so that means the dollar is weak. But you can see our algorithms, the daily and well, there you go. The weekly is trying to drop on Friday here. So it looks like we're seeing some downside pressure on the dollar. Let's take a look at the ETF, how it closed out last night. Right there, the UUP. And that's doing the same thing. It's got that thing going on where there's some pressure on the downside, but it hasn't gone into the sell yet. That's for sure. Let me just do that one more time. Control R. There you are. So, and that's holding up. So it looks like this will be 3 full weeks now. It'll be a 4th week in a weekly buy. But you can see the daily has rolled over here at the same time. And as you can see here, as we look at the Swiss, this is still moving up, which means that the dollar is still relatively firm on a lagging indicator at the moment. But we'll watch it. We'll see it. We'll see how it plays in the end result. But I don't think there's a lot of, someone just texted something to me. It said, looking at the crazy policies of the last 2 weeks of Mr. Biden, said bets on how long till the entire economy is destroyed? Less than a year? Question mark. And I said, laugh out loud. Destroyed? No. Slowed? Yes. I mean, most people don't realize that the rest of the world is even worse shape than us. So, and us being the world reserve currency, and our Federal Reserve marches the rest of the planet around and so forth, and no one can even. You'd have to put China together with the European Union together with the Russian Federation together with Britain together with the Commonwealth, and that would be at best that might be at parity with the Federal Reserve. So unfortunately people don't realize how strong the Federal Reserve is across the planet. It sings. When it sings, everybody listens. I think that's the best way of looking at it. So, but destroy an economy? Nah. It would just go into a very slow, meandering. Just will become Europeanish, I guess you could say. We'll become Europeanish. So, or head towards the Europeanish. Remember, we have a lot of laws that stop a lot of stupid things from happening. So, as much as Mr. Biden is swinging away as the Caesar, he's our modern day Caesar, doing everything through executive order, more than the last 3 presidents, or 4 presidents, 5, 6, 7, I don't know, 8, the last 8 presidents combined together. Can you imagine that? He's doing more. I don't know I doubt the media is even paying attention to it. He's done more in executive order than the last 8 presidents combined together. Yeah, so. And nowhere's near. I mean, Mr. Trump did 4, I think, or 5. That was it, in the same time period. So, it's amazing Why aren't they calling him the new Mussolini, Hitler, Genghis Khan? I don't understand that. Again, when you control the media, you control the narrative. All right, there we go. So that's what we're seeing at the moment. And so I don't think any of these things are destroyed. I think what we really see is we're just watching the channels of all these pairs trades. And you try to stay inside the range of these pairs trades, and you sell the highs and then watch it go down to the lows and to the troughs, and you buy it. And our math is usually pretty successful, keeping you 8.5 out of 10 times right. And so you have more winner chicken dinners than you have no dinner at all. All right, let's jump over to Euro. Right there's the euro on the J4X. You can see that is popping up against the dollar. So Mr. and Mrs. Dollar are having some issues right now. So let's see, what do I have to do? I have to move this down a little bit. I guess I do it just like a little bit like that. There we are. And then let's see what we can do here. So we can go like that and put in the euro. Now you can see the euro trying to lift its head up, but we're still in a daily sell. Let's give it a refresh too at the same time. Control R. There we go. You can see it's going to stay in the sell the way it's acting at the moment, and it doesn't look like the weekly is going to break out anywhere. So we'll go into a full third week of in the sell on the weekly trend from here. So the best I can say about that is no destroyed economies, just sloppy, lazy, going nowhere, trade the range type of environment in the pairs and pretty much everything else. We did see the metals explode a little bit, and we'll get over to that and take a look. But they have shown some real aggressiveness. Maybe they're concerned about inflation. Who knows? Once the Federal Reserve, someone actually pays attention to it, they'll straighten that out and sell it down somehow or another. But at the moment, and then I heard this morning Bitcoin is actually showing some life in it too. So I guess Mr. Musk has said something very positive and excited the same ones that are exciting the Reddit universe, with the GameStop and Nokia and AMC theaters and all that other stuff, cranking it up. So we have to say this about that, and that is it's just one big sloppy market going sideways, and you just trade the range, and it just seems to be the recipe for it all in the end. All right, now let's go over to our favorite, and that is the British pound. Yeah, British pound seems to be showing life in it constantly. Let's see how it's doing it today. It's still in the 137s. I keep on thinking we're going to see the 38s, and it's going to jump into like a higher atomic shell, and it'll play the 138s to 142 area. And as you can see here, this thing is fighting not to go down. And then it would drift over to it in our Chicago quant right there. You can see flirting. Let's do a control R on that. There we are. And you can see there it's playing with the daily sell, but it's unchanged. It's really quiet. I mean, look at the weekly. The weekly doesn't seem to want to give it up any. It's been in that weekly buy since like the cows came home, right there in the 130 area. So the trend has been your friend. It's been going up. That's what we follow the weekly with, and then we try to get you to understand that the best plays are when it's in a daily and weekly buy, not the sells, just the buys right there. Usually you have your winner chicken dinners. And so that is the first three, and we can see that the pairs are doing their best to vacillate sideways. I think that's the best way to describe it. And I guess we're seeing the sideways action in the euro on the downside more. We're seeing the upside vacillation of the sideways trend on the upside when it comes to cable. And then for the Swiss, it has kind of gotten trapped into I don't know what I want to do type of look, which seems to be a really good measurement for the dollar all the time, more than anything else. And for sure enough, it is. It's going sideways there. All right, let's go over to what I like to think of as dessert, the Turkish Lira. We find that to be a fascinating thing to watch. It was 54 weeks in a weekly buy. We're now like 4 or 5. Where's that? That's line 17. Now we're 6 weeks in a sell after 54 weeks in a buy. That alone is incredibly entertaining. It's just like having dessert. It's the dessert of pairs trades. You can see it's working its way down, and right there again, we are 7 days in a sell and 6 weeks in a sell. So anybody who's playing this short side has been a winner chicken dinner. And we'll take a look at that through the Chicago Quant. Oh, someone's texting me. Let's see who that is. Let's see. Let's try it again. Right. Let's see. Right. Yeah. And you can see that we went into the sell up in here. Right there. And it's been slowly sliding. But again, you know, a lot of this stuff is very clear. Ooh, something went avalanche. Let's see who texted me. And so, what you really are seeing is we're really seeing the action as a, you know, I've said it like 9 times now in this webinar, sideways. You know, I don't think they're not going to crush things. They're not going to, you know, I could see the cable moving up. There's no doubt about that. Do I see, you know, some type of wild devastation? Nah, not particularly. You know, I just see just slow, steady action, you know, nothing more than that. So, and I really don't think that there's I don't think there's that much action that can be said about the whole market in general. You know, I mean, even with Mr. Biden coming in and doing the Caesar Genghis Khan thing with nothing's been done legislatively. Matter of fact, the Democrats don't even want to. They don't even want to do any legislation at all. All they want to do is basically let them do executive orders. Remember, 8 years of Mr. Obama, they never passed a budget. Democrats are really good at that, and when you control the media, you can really. They hate putting their name on something and being responsible. They really do. They like to control everything, but they don't want to have their name on it as them being responsible of controlling it. And so 8 years, Mr. Obama never passed a budget. Every time he floated a budget, even remotely close to the House and the Senate, it would lose in the Senate like 97-3 and 98-2, and you know, it's really crazy numbers. I mean, he could really, you know, they passed Obamacare, the medical thing, going into his end of his 2 years. At that point, he had the people so pissed off in America that he lost the House of Representatives. Remember, he had full control of the House and the Senate, just like Mr. Biden does, only better. Not worse, but better. He had larger majorities and much more aggressive Democrats and so forth. And so Democrats, when given the chance, will do nothing. And that's what Mr. Biden is doing now. I mean, he's done 30-some-odd executive orders in less than 8 days. You know, he won the Attila of the Hun Award. He's won the Great Caesar Award, being Caesar. Oh, he's winning the Mussolini Award for full control of an economy, or trying to full control an economy without any legislative activity. So, you know, no wonder our markets are now going, and the pairs trades are going to look sideways, because they're probably looking, you know, money's probably looking. Look, first of all, you think of this. Think how much money feels confused and lost. Oh, there we go. We got Slowick. Hey, Slowick, how you doing? Hi, Doc. Question about are your indicators on J4X? Unfortunately not, but we do have indicators on J4X that we definitely think look really well and emulate our math in the 68th percentile. So that's not too bad, and that's what you see there now when you look on the screen. So we use we got that Al Einstein thing going on with the relative, and it's got nothing to do with dating my cousins or anything like that. What it is it's one thing against the other, you know. In this case here, we look at a slow D versus a fast D. and we use a CCI at the same time. So no, we have a daily, but what about weekly? Same like daily. Oh, on J4X, let's take a look. I've done this before too. It's very insightful. It does about the 68th percentile on that too. So let's take a look at Turkish Lira since it's been a really good tool to watch. And I think we have the chart of the Turkish Lira up there on the J4X right now, right? So yeah, so it's pushed itself into the sell back here in, what was that, November, right? When the legal changes were done to, what was it, to the what I want to call him the Secretary of Treasury, but they call him the Minister of Finance, maybe, of Turkey, and the chairman of the Sovereign Fund, who is the same person. That was President Erdogan's son-in-law, and so he had those jobs, and they removed him for health reasons. And so I hope he's getting better. And so you can see here, we've been the same way, in the sell there, in the December, and then when we move it over just a tad, where it all started, this actually picked it up faster. Now we can take a look at, let's compare a couple of them since you asked. It's a good thing to do. Let's take a look at cable. Let's see how the cable looks. And there's cable. And let's put cable up there again. There's cable. Now cable's been in a buy here since October. And you can see here, same situation. Been in a buy since October. You can see the CCI made it through there with the white line and the dotted line. I think you want these two things to be really coordinated. That's probably like the best of all. And so, that was pretty good. And then let's take a look at Swiss, see how it rolled over when it rolled over in our work on a weekly basis. Let's see, Swiss right there. And then let's take a look at the Swiss. Let's see, not Swiss, I'm sorry, Euro. Let's take a look at the Euro. There it is. There's Euro. And you can see on a weekly basis on J4X using our, relative type mathematics with the slow and fast, it broke down too, right? Oh, this is a weekly, right? Yeah. So the weekly broke down there right here over the last 3 weeks, just like the same way we did right here, So that's pretty cool. And this one really led it, the purple led it nicely. And then when this joined in, that's where the real, let's show you. It's where the real short starts off right on this week. So yeah, this is it works out even better using the same tool on J4X as following our weekly. It helps out a lot. It can be a little sloppy, but overall it's not a bad way of looking at it. So if you look at it on a daily and a weekly, and go back and forth, it will give you a good, honest direction. So if and then this way you have something. You have my work during the webinar, and then you have J4X you can use from there, or do it however you do. I hope that answered your question there. So, matter of fact, let's take a look at Swiss the same way. There's a Swiss, because I think we're fact check spreadsheet. We're 2 weeks in a buy, so let's see how it does it on that. See, it's jumped up there too over the last couple of weeks, going on a third. So it does a fine job. It does a very fine job that way. Gets a little sloppy here at times. It tries to turn up here, but we were in a buy there, I think, and then let's see where are we. But overall, it's been pretty good. See, last time we were in a buy was back here on the October side of it. So let's go back and look at the October. So we were long in the October. And you can see this did start some type of downslope too. You can see that. And we went into the buy here in the, what was that? The one, am I looking at the right thing? Or did I not put Swiss in there? I don't think I put Swiss in there. Let me just double check this. No, we're looking at Euro, so let's put Swiss in there. There we go. That's better. So we went into the sell here, way back here, and what is that? That is December 4th, 220? Yeah, I guess so. wild about that. Doesn't seem right. They. Oh, okay, yeah, December. Okay, the December 20. Okay, yeah. So, and then you can see here on December 20. Where's December 20? Well, yeah. See, it kind of does it there. It starts to break down at the end of November. And you can see there catches the slope. So yeah, it works very well on the weekly and the daily. The daily seems to coordinate, like I said, about 68% of the time. It can get up to 70, and the weekly. Oh, cool, and so forth. Yes. All right. Where were we? So we were just looking at the cable. No, we were looking at the Turkish Lira. I thought that was the dessert. That's right. So from the dessert, what we do is we slide over to Canadian. Don't ask the logic of. No, I do have a logic of it, but it just seems like why does it work? Don't ask why it works. It just seems to work. The Canadian and the Turkish Lira seem to want to. I don't know. They march together for some reason. I guess they're both being traded against dollars, so that kind of makes some sense. And so when the dollar's strong, they're both weak, or more than usual. Let's put it that way. And so there you can see right there, we're just going into a weekly buy here on the dollar CAD. So let's take a look at it through Chicago Quant, our work, right there. And you can see we went into the weekly buy last week. No, we didn't. We're not in a weekly buy at all. We're still in a weekly sell from up in here. So this thing is trying to flirt its way into it right now, and maybe they will start to lift it. We have seen oil starting to roll over. I think we did. Yeah. No, oil's kind of. Let's take a look at oil. Usually, this is a confirmation of where things are going. We use this pairs trade and the NAS-CAD pairs trade to try to understand the oil market. So let's drift over to the oil market, and that's silver. See, look at silver. Someone forgot at the Federal Reserve that they're letting them trade it up. You can see here we went into a daily sell there yesterday, but it's already trying to lift its head up. So give it a quick refresh there. We're in a weekly buy with no problem whatsoever. And so the CAD normally with this climbing usually is heading down, and that's what we have been seeing is that the CAD has been heading down. Let's go over to NASCAD right there. And now this is more on an upwardly slope because oil has been on a big upwardly slope. See? That's how that usually works. And this is the weekly also. Now, it does drift in and out a little bit in here. And I think, where are we at in the NASCAD? See, NASCAD, our work on the fact check spreadsheet, we're 12 weeks in a buy. So it's still in a buy here. It has, like I said, this works sometimes pretty well, It can get a little sloppy. Went into the sell for this on this weekly basis and then got back into the buy here, and then it starts to play and make you nervous on the downside again, but it's still riding. But you can see it's getting a little sideways in there. And we are 6 days in a buy and 12 weeks in a buy. So it's been a very firm thing on the upside there with the NASCAD. All right. Let's see. Where do we go from here? Oh, and you know what? Since I'm in the neighborhood, let me do this too. Let's go through the oil sector. I want to do that. Yeah, I want to do that. Let me do that. So let me do this. Let's save the... let's go look at all the oils and energy contracts that we follow here. Let's move that out of the way too. There we are. And let's save that. And there's crude. And then we take a look at the natural gas right there. Now, once we jump into an area, I like to try to look at these things a little bit more. You can see natural gas has been firm, and we've been in a weekly buy there. Oh, you can't see that. Let's try that right there. And right there. And let's take a look at it on the J4X. Dukascopy does do the natural gas. We're clicking, and there it is right there. Is that it? That could be it. Oh, let's try that. No, that must be like some type of pipeline company. That's fascinating, whatever that is. They do have natural gas on here, though. I've seen it. There it is. That's the U.S. natural gas. And so you can see the strength will probably be on here too for a couple of weeks. See? It's definitely jumping through here for the last couple of weeks. The same thing. And then All my work does is it smooths out things much more. What's the best word? Statistically. So in other words, I can be in the 85, 90 percentile area. This will be in the 68 to 72 percentile area. That's all. And that big difference of 20% can mean a lot, or 15 to 20%. So in this case here, you can see natural gas has been one of the more unique things, of the energies, especially when we're heading towards an ice age. I don't know how much more to describe it than that. I'm always confused what the environmentalists are trying to tell us. They call it global climate change. They call it climate change. Isn't that called weather? They've given up on trying to guess if it's going to be warm or cold. They just want to say it's just watch out for the weather. Watch out for the weather. Yeah. Climate change. Yeah, every day the climate changes. That's right. They've surrendered, I guess you could say. And then, where else do we go from this? I don't think we do bean oil. They just do soybeans on Dukascopy here. Let's see, I'm looking. Yeah, see, there's soybeans right there. And so then what we do is we go over to, I'm going to put that up, but what we do is we look at the, we don't even have it up. Let's get it in there. We look at the bean oil in the commodities, because that's kind of like a good insight to, you can burn it, so that automatically makes it like a refined product. All right, let's take a look at that. And there is bean oil right there. March bean oil. Let's give that a refresh. As many as you see the red dots there. And it has pushed itself into the sell, and it's been going sideways. You can see today it's trying. If we didn't have a red dot there, I'd be putting a green line right there. But instead, we're going to put it right there instead. So in other words, the opening of the next bar could be the insight of it all. And that's the look in our oil complex. And so then, do we really correlate? We think that everything in the pairs trades links to the metals, because we find them to be surrogates nowadays for the metal sector. So what we'll do is we will, wow, look at this. The weekly is really punishing this thing right here, isn't it, for the last couple of weeks? But let's take a look at our beans. See, that's why we say that. You got to be careful with that. Let's check out the beans themselves. There it is right there. And this is our weekly math, so it's been very happy. We've been in a buy since, like, I don't know, the $10 area or something like that. So 9 something. So you can see here, it can be a little dicey, but if you're watching Doc's work, then you know that you can be safe, yeah. So, and we have had weakness. There's no doubt about that. We went into the sell. Did we go into the sell right there? The day back? No, it stayed in there and buy. Then gapped down, and it's trying to climb back up again. We'll see. But so far, we're in a sell that is going nowhere, and you can't take the sell because why? We're in a weekly buy. So that's what's so nice about having Doc's work and using the J4X at the same time. You put them together, and you're going to be a lot more accurate and keep yourself out of trouble. And that's what we really try to do, traders. The idea is to keep yourself out of trouble. I'd rather not make money than lose money. In other words, I'd rather make trades that make money and not just speculate so much to the point where I'm giving it back because I'm pushing too hard. Instead, let the math do its best to tell you where it's going. All right, so what do we do? Oh, yeah, let's take a look at the metals. Let's see what the metals, because the metals do correlate to the currencies enormously. And so there is gold. Well, let's take a look at silver, because I'm going to put silver up there first. Because silver is showing some life, and Robin has been saying over and over that he sees action coming, and boy, is there action coming. So let's see, where is it at? I guess it's not here. We go over to there. And there it is there. Look at that wild, crazy spike. And it's trying to get into the weekly. Let's do that again. Control R. It looks like next week, if it stays like this, we might get into a weekly again. So that would be really nice. Get the daily. The daily's trying to lead you into it. And next thing you know is zoom off to the buy side. As you can see here, it's trying to do the same thing on the weekly on J4X. Oh, let's do this too. Let's save that. There we are. Let's move that out of the way so you don't have to see that. I can just save it into the file. There we are. Then we take a look at gold. And gold's being a little bit more persnickety. And let's put it up on here at the same time. And you see here, it's still on the weekly sell also. Let's do a Control R. And the daily is trying to get its head up, not like silver, who has been up. I don't know, we'll see. It's trapped in the, as we said at the beginning of this, the world is not going to be destroyed. What it's going to do is it's going to slow down, and when it slows down, it goes into sideways chops. And I guess when you scrunch it, you can see we've been in a sideways down, obviously since we went into the weekly sell here. But, overall, it's really more of a sideways action, and we're just at the bottom end of the range. And so you can see right here, same situation. And they're both trying to turn up, just like that's trying to turn up right here. Well, this is, it's doing it even less on our work. And so, let's save that. And so that's a go. Then we take a look at copper right there. And then we refresh that, and you can see a little pressure there. And you can see actually the weekly is starting to flirt with it after all these weeks in a buy. We went into the buy. Where are we going to the buy in this thing? All the way back here in the $3 area, $3.50, $3.25 area, $3.10 area, something like that. And now we're starting to flirt. So what we'll do is we'll put a cute little circle around this, like so. Change the color of it, like so, to the pink, just like when we do a weekly. And we'll put some dash things going on there and thin it out a little bit. There we are. And then take the inside of it and make it black. There we are. And you can see it's having its actions show that it's trying to join the other metals, which is very curious, because you see some wild good spikes on the upside. And then the last one we look at is the platinum, which we call the Yellen spread, where platinum seems to be much stronger nowadays than the gold and the silver. You can see it's been in a buy since the 980 area, and it has taken itself up to the $1,100 area, whereas gold is pretty much unchanged, and same thing with silver. So they're definitely rallying to Mrs. Yellen's actions. They were anticipating her policies will be in effect. Now, that's odd there. Last night it said it went into a buy, and obviously not, so we'll get rid of that line there. And it's still flirting in that sell action there, but look at the strength that's trying to come out of it. You can't short this thing. You just know not to be long it at this point. For the weekly, being in a weekly buy, and this being in a sell from up in here. So, best I can say about all that is we'll see how that leads its way back up again. Let's save that. And that's the platinum. But we think the platinum's going to outperform the gold. There we are. And so there is the metals complex. And so we've taken a look at that. And then we can go and take a look at, unless someone wants to see a particular currency pair, we'll go back to it. Because we do, we see some analogous to certain currency pairs with the indices. And then let's take a look at the indices here, like the S&P 500 right there. And that's the weekly there. And we'll put it up on here and take a look at the stock indice complex. Because it's been a wild and woolly week. And so there is S&Ps right there. You can see we've been in a daily sell since this wonderful day right there. And look at it. It's trying. Let's give it a control R. It's trying to flirt its way into the weekly sell. We've been in a buy for, since December, early December. So this is going to be interesting. And you can see it there on J4X. It's trying to do the same thing. It's trying to roll over. The pressure is on. And we'll go save. And then we will do the S&P 500 right there like that. So we'll keep an eye on that one. And then we go over to the what they call the Tech 100 on Dukascopy. And this is the granddaddy of them all now. What used to be the New York Stock Exchange was the granddaddy. Now it does like 1 billion shares a day, and the NASDAQ does 6 and 7 billion shares a day. And there are 6 NASDAQ stocks now in the Dow Jones Industrial Average. Remember, the Dow Jones Industrial Average was a New York Stock Exchange index, and it was there to promote New York Stock Exchange stocks. But instead, what we're seeing now is the strength in but instead, what you see is the Tech 100 just outperforming everything, and 6 of those are the majors in there, like Microsoft and Apple and Cisco Systems and Intel and Microsoft and which one else? Oh yeah, and I guess it's not Shopify, but it's one of those, Salesforce. That's the 6 NASDAQ stocks now in there. So it's taking over. There's no doubt about that. The NASDAQ is the king. It does 5 times more volume a day than the New York. And you can see here it's trying to roll over too. And then when we go and look at right there, same situation. It's trying to do the same thing. Matter of fact, is that minus? That is minus. So we've even slid into the minus zone. Let's see if that really does anything. I'm going to put the little warning on there, but I don't think it's going to close in the sell. But who knows what today brings? This has become a fascinating. Oh, let me just tell traders too what's going on, and that is that because of the short squeeze, the funds, and they're losing billions of dollars. The funds, they have to go and sell winning trades. So that's what the pressure is. The pressure at the moment is from the calamity of the short squeeze. They have to compensate themselves. They have to, in other words, take gains somewhere else to be able to pay for all that. And so that's what we're really seeing here, is that the stock market is feeling this pressure from the short squeeze, which is really odd. You would think that it goes up, short squeezes. That's what the old New York Stock Exchange, one of those colloquial words and expressions came from the New York, is, they squeeze the shorts to rally it. In this case here, they're squeezing the shorts, the rally that's, these really dead companies, and they've trapped the institutions, and instead they have to go out and sell good stocks because of that particular thing. They need to get cash up. They've had to pull out the billions. I mean, billions. That was it, the Gamestop, that GME. They were, institutions were 150% short of the float of stock. So in other words, let's say you have 1 billion shares. There was like 1.5 billion shares short. So, I mean, yeah, they're going to get squeezed, and they're going to get squeezed so hard, and that's what's going on. Yesterday we mentioned one fund that lost $1.5 billion. I mean, that's like, ouch, mommy, I don't like this anymore. Exactly. Now let's take a look at the Dow Jones Industrial Average right there, and then we're going to show you the index. We finally figured out, obviously, what was going on. You can see here's the Dow Jones Industrial Average, and the action we're seeing in it. Let's see, we have it over on J4X. And we figured out what's going on there, right there. There's the Nifty 50 there. It's right there. And so that's what's going on with the Russell. The Russell's been rallying like a mad animal on the upside. And now we know why, because all these short stocks, these companies that were really bad shape, were in the Russell. And so people have been buying the Russell to try to flatten out their position or hedge themselves. You know, classic hedge fund guys. They always do stupid things. In other words, imagine if you were trying to insure your automobile. And what they do is they go out and instead of insuring their automobile, they go out and buy an insurance company or stock in an insurance company instead. That's what they do. That's how unhedged and logical they are. These hedge fund people who are not very bright, and that's why the hedge funds don't really make any money. They live off the yesteryear of success. And so what they do is, imagine you buy a car, and instead of getting insurance, you go and buy stock in an insurance company. Yeah, is that crazy or what? That's how they're hedging themselves. So in other words, you bang your car up, and you're just hoping that the insurance company, there's so many lack of accidents that the stock goes up in value. That's how they hedge themselves. That's how they got in trouble with GameStop and Nokia and AMC theaters and so forth. Is that they're all getting squeezed on all of them because they didn't hedge themselves when they shorted these things. Instead, they're just naked short, and to the point of absurdity, 150% of the stock float. I mean, who in their right mind lets people manage money like that? And let me just show you, right, where's it at? Right there. That index has been running like a mad animal. I mean, it's exploded from December. It went from, let's move this over a little bit. Can we do that? No, that didn't work. Let's go back to that again. Oh, there it is right there. And so let's see if we can make this a little bit more visible. Okay, so this index, well, that short squeeze is going on, ran from 1,800 to 2,200 almost. 21, what's the high there? 2179. So let's say, let's round it out. An $1,800 index jumped, what is that, 30%? Went up 400 points, right? So what is that? That's 25%, right? That's a 25% move. And that's the reason why we were wondering why they were running the Russell extremely aggressive compared to the other products. And now we know why, because all these short stocks that are exploding on the upside are in the Russell. And so of late, you can see the Russell's finally selling off because I guess they figured they're going to take profits that way, or the hedge funds are trying to sell the Russell, again, trying to hedge themselves in a very esoteric way, which is usually detrimental to you. That will put you out of business 9 out of 10 times doing esoteric types of spreads like that. Oh, let's do this. Let's like that. There we are. And so that is the index sector. That's exactly what that is. That's the index sector. And so we've now seen, yes. And so now we've seen the 3 different regions that we watched that match up to the currencies. And that is, the metals complex, which is an interchangeable all the time because it's dominated in dollars. The energy sector, again, second largest after currencies, is the energy complex. And then far down is then the fourth. Is it? Let's see, first, second, third. So fourth is the metals complex, and then way down is the stock market. It's very small, and the number one is this area right here to show you, and that is the bond market. Bond market is the biggest market of all, and then the currency market is the second biggest market of all. So. That's why we see the action that we're seeing. And you can see here's the 10-year bond in the United States, which yields like 9/10, almost 1% interest, which is pretty good compared to the rest of the planet who's trading things in minuses and so forth. Was there 17 trillion overall assets in the bond markets are trading in the minus? And then here's the The American 30-year right there. The American 30-year. Also trying to sell down a little bit. Obviously not there, is it? Let's do a Control R. Because now that's kind of... Oh, okay, that's better. And so you can see it, went into the sell yesterday. It's still trying to get into a buy, which is curious in its own right. We'll see what they do here if they try to curve it again. It's been in the sell since here, and it's gone nowhere but kind of sideways and up. And that is yielding almost a 2% yield, which is pretty good for 30 years. There's nobody else on the planet's even remotely doing that. Japan is threatening to do that. They're starting to talk about paying. They've been talking about paying interest on the bonds now. Whereas, speaking of which, Europe, Commerce Bank just laid off like 30% of its people. The banking business is kind of defunct at this point. They're like a pass-through. I think that's the best way to describe what we see in the whole sector there. I really do. I don't think you can describe it any better than that. It's a pass-through. The banks don't exactly lend money to people like they used to. They don't grow businesses. The private sector. They don't help to grow a lot of private businesses at all. Instead, they're basically just doing checking and moving money around for them, and that's why the cryptocurrencies are the way they are. Speaking of which, we should go back and look at the cryptocurrency, just for that reason alone. Let's do that. Let's go over there and take a look at the Bitcoin. Bitcoin is jumping today. I know we closed in a daily buy yesterday, right there, and we're still in a weekly buy from back here. But look at that strength in there today in the cryptos. Mr. Musk came out and said something last night. Obviously, our math was picking up on that, and they jacked it about $3,000 on the Bitcoin. And I'm sure all the rest of the cryptos are joining in with that. And that's usually the normal action we see. Let's see, where's Bitcoin right there? There we are. So let's go back to there's the grains. Now the world is, very. There's a lot of strange things going on. I guess the world is starving in some ways. I know China is talking about constantly needing more food, and so they're buying up, all kinds of stuff. People are hungry there, and I guess they can't let everybody starve. They only just let certain people starve. They've got those odd camps and so forth. Re-education camps and so I don't know. There's a lot of bad stories that come out of the region there. Really freak everybody out. But our American left likes that stuff. They like slave labor. I guess we'll be buying from Libya. Don't they have a big slave market now in Libya, which is really weird. You don't hear much about it. They don't seem to complain about it. They seem to talk about slavery from 200 years ago, but they don't talk about the slavery that's going on in the Libyan slave market. Supposedly that's the hub now for buying and selling slaves. Really weird, isn't it? It's hard. I say it, and then and I'm sure people are like shaking their head, like, "What the hell's Doc talking about? Libyan slave market?" But yeah, just Google it or something. I'm sure. Let me Google it. It's sort of interesting. Libya, that country. How do you spell Libya? Is that Libya? I don't even know how to spell Libya. African country. Liberia. Libya. Maybe that's it right there. There it is. Okay, Libya. And then, now that I got it spelled right, let's see if we put slave market. Slave market. We see it here in the States. We see it in different things. Inside the modern slave trade. Yeah, there it is. Okay. That's not it. It's an advertisement. How can you advertise on an article about... Oh, here it is. Okay, right there. Libya's slave trade has shocked the world. Look at all the things. A video of men appearing to be sold at auction in Libya for $400 has shocked the world. Okay, great. So yeah, I mean it's things are definitely weird there. But I don't hear anybody talking about it. I guess nobody really cares. They like to be complaining about slavery from 200 years ago instead. Forget about the poor people being enslaved now. Uh, so anyway, yes, that's the food, the market, the like the grains and the meats and all like that are exploding from that action, which is really fascinating. Like as if there's like no tomorrow or something. I don't know. I mean, we see all kinds of strength in these markets, and they don't seem to let go. Like there's corn. I mean, are we ever going to see $3 corn again? I mean, the strength is really wild. We've been in weekly buy in that thing for 23 weeks now. Back down in was it in the $3 area? Let's go see. Last time when we went into there, corn was trading at 330, 340. Confirmed that week. It was, where was it at? Corn was trading at 334 as a low, closed at 335, and now we are trading in corn at almost 5.5. So the question is, that's we're talking about a 70% move on the upside. It's a big move. And we have seen grains do that before, but since it's dollar denominated, it can really shake things up. Now you can see wheat playing with the weekly sell here, but not there yet. And you can see daily sell just a little sloppy and a little action there. And so flour must be much easier to grow. And so we don't see as much of an explosion. I think we're only like, on the fact check spreadsheet, it was at 7 weeks in a weekly buy when it comes to wheat. And then soybeans, which, they use all kinds of things like oil out of it and so forth. We saw that right there. Soybeans, let's do a control R to that again. But you can see, this thing has been up in the 14s. Last time when we went into a weekly buy in this thing, it was down in the $9 area, $9.50 area. Now we're in the 14s. So, wow. The obviously food is exploding in cost, and governments are scrambling, and the question is, will they be able to help out? Now here is the feeder cattle. Obviously some people like to have real protein, and you can see they're in a weekly. Well, look at that. Feeders are trying to threaten the weekly sell there, so that's interesting right there. You can see plot 1 is a minus 14. We're running the gas line 5, and so that means plot 4 is minus 29. So it's flirting with the weekly sell as we speak. So we'll just go like that with it. Put that cute little circle in there, and we'll see how that rolls along when it comes to the action itself. There we are. Oh, and we need to fix this dead center of it, like that. Go black. There we are. So it's flirting with a sell on the feeders, but the farmers that we talked to basically are telling us that oh, you can't see it there. The farmers are telling us that they're perplexed by this whole action. This is not following any real fundamentals. It's just, I guess you can say is that there's a lot. All year long we've heard, last 4 or 5 months as the season went on, we heard stories about the necessity to buy the grains, by these different countries in Asia and so forth. They were desperate. And there's the meal from the soybeans too. So you can see the spread itself has been feeling the pressure there. But we're still in that weekly buy. Look at that right there. It doesn't want to let go of it. It's been a quiet day on questions, but at least we were able to answer some good stuff. Now here's the red wheat. That's the more fancier of the wheat. Now that's been in a weekly buy. I don't know. We've been in a weekly buy in red wheat for a while. Look at that. All the way back until August. So we've been in a buy in red wheat since the 450-ish area. And we are now trading in got up to almost 6. We got to 650 from 450. Big moves, traders. Big moves. Obviously, world is hungry. Obviously so. Now, if anybody, oh, here we go. Finally, there's someone's asked a question. 47 says, just curious, what do you think about the GameStop madness? Yeah, we were talking about that earlier. It's just a short squeeze. And so what's happened in a modern era of internet advice and conversation, and also they have investment groups. They're investment groups. They have squeezed the professional trader because the professional trader got so sloppy with the way they were shorting the product that we're seeing an incredible amount of pressure on the upside now. So in other words, let me explain it to you just very simply. The amount of short interest, in other words, the amount of position of the short interest is 150% of the stock float. So let's say they have 1 billion shares floated. You're a public company and you've floated 1 billion shares of your company. Right now there's 1.5 billion shares short. So there's there's such a squeeze going on that the hedge funds have lost billions because they didn't really protect themselves with options. And when you don't protect yourself with options, Dukascopy does the binary options. You trade with the binaries, and you're not going to get in much. You're not going to have much of a problem if you buy or sell these things. You're going to know what your risk is. But when you're naked short companies like that, same thing with not only is it happening in GameStop, it's happening in half a dozen other products, which we were showing the Russell Index had a bit. The reason why the Russell had moved up in the last month or so 25%, because they're being squeezed, and all those stocks that are really doing poorly, like AMC Theaters, that's one of them that's doing poorly. Is now gone flying up 3 times in value and 5 times in value because these funds kept on shorting them and didn't look back. In other words, they didn't say, okay, I think I'll insure myself. I'll buy some calls or put some binaries on that'll protect us. Instead, they chose to be naked. And so that's all we're really seeing is a modern day squeeze, which is classic. And that's what's that's what we were saying here. Excuse me. That's what we were saying here is putting the pressure on the stock indices, because those funds now need to sell things that they've made money in to cover themselves. So in other words, the Russell went up 25% from this time period right here. You can see the NASDAQ 100 only went up like 7%. But the Russell went up 25% because it has all those short squeezed stocks in it. And so the hedge funds were buying the Russell to try to hedge themselves. Instead of buying calls or doing binaries, instead they just went out there and did less coordinated or correlated strategies, which is classic hedge fund. That's the way those hedge fund guys function. They always do something odd like that. They don't really hedge themselves accurate. They do that. They hedge themselves inaccurately, but they get away with it most of the time. But then you can see over the last bunch of years, hedge funds are not making money anymore. That's because they've really lost direction on how to offset risk. So what you're seeing is a lack of respect of risk. That's exactly what it is they don't respect the risk anymore, and they just have so many billions of dollars that they'll do foolish things like that. And then when we come back and look at something like the cable here, you see the strength in it, even with it trying to flirt with the daily sell. You can see it's been in a weekly buy for a while. The currencies don't have that problem of the enormous short squeezes. We did see something wild like that occur in the Swiss against the euro back about 6 years ago, but overall you don't see the pressure in the currencies because they're not really being squeezed. They're being kept in line by the central banks and the Federal Reserve. What they do is they make sure that these things stay in a range that's comfortable for everybody. Whereas the hedge funds, like I said, imagine there's 1 billion shares outstanding. The hedge funds are short $1.5 billion. Well, they got to cover them somehow. They can't just sit there as the product goes flying up. They've got to close those shorts out. And when you have to close out a short, you just reach. You don't look at price anymore. You just know to buy and close it out. And that's what you're seeing right now with Gamestop and half a dozen other products. Oh, I'm glad, 47. You know, we try to give you a solid, clear idea of what's going on. And that's exactly what's going on there. So, what else can we say? I guess we're done, really. So, everybody have a safe and a smart weekend. And we will catch you on Monday. So, happy trails to you until we meet again. That'll be Monday. Happy trails to you. And it'll be February, too. It'll be February. It won't be January anymore. So, happy trails to everybody. Have a safe and smart weekend, guys and gals.